Welcome to today's market report.
Global equity markets slipped on Thursday while US Treasury yields dipped after reaching two-week highs after two hawkish Federal Reserve officials called for the US Central Bank to start ending its bond buying program. Ahead of a speech by Fed Chair Jerome Powell, Dallas Fed President Robert Kaplan said he still believes the Fed in September would announce a plan for tapering to start in October or shortly thereafter. Earlier, St. Louis Fed President James Bullard said the Fed is coalescing around a plan to begin reducing its $120 billion in monthly bond purchases. Powell is due to speak on Friday at the Fed Reserve's annual Jackson Hole, Wyoming Policy Symposium, held virtually due to the regional spread of the pandemic. Minutes from the Fed's July meeting released last week showed most policymakers expect the Fed to start tapering bond purchases this year, though consumer sentiment and economic data have weakened since that meeting. Following Kaplan and Bullard's comments, benchmark 10-year Treasury note yields reached their highest level since 12th of August before retreating to 1.3491% after US markets closed. You're going to see continued commentary around deciding when to start tapering. I think they want to have that digested by the market, so it's not a surprise when it begins later this year, according to Jacob Asset Management. The MSCI World Equity Index, which tracks shares in 50 countries, was down 0.52%, while the Pan-European Stock 600 Index fell 0.32%. Overnight in Asia, MSCI's broadest index of Asia-Pacific shares outside Japan fell 0.65%. On Wall Street, all three major indices closed lower, with stocks in consumer discretionary, technology, financials, and consumer staples among the biggest losers. The Dow Jones fell 0.54% to 35,000, S&P 500 lost 0.58% to 4,400, Nasdaq dropped 0.64% to 14,945. Oil settled lower, snapping a three-day rally on renewed concerns over demand due to rising COVID-19 infections, and as Mexico restored some output after an oil rig fire. Brent crude settled down 1.6% at $71.07 per barrel. WTI oil settled down 1.4% at $67.42 per barrel. Gold futures was up 0.15% to $1,792.20 per ounce. On the FX front, GBP/USD treads water on the last trading day of the week. In the initial Asian trading session, the pair hovers in a very close trading band with no meaningful traction. GBP/USD is trading at 137.02, up 0.02 for the day. The dollar index, which tracks the greenback performance against its six major rivals, trades at 93.07 with 0.26% gains amid general risk-on mood. Investors stayed invested in the US dollar after Fed's taper talks picked up pace ahead of the Jackson Hole Symposium. Fed's official hawkish comments supported the narrative of the central bank timing of tapering talks. On the other hand, the sterling lost its ground on risk aversion among investors ahead of the Jerome Powell speech, despite the fall in COVID-19 cases. In the latest development, the UK industry leaders reported that Britain's post-Brexit supply chain crisis could hamper Christmas celebrations and continued to cause food shortages until 2022. As for now, traders wait for the slew of economic data of US personal income and spending data, goods trade balance, personal consumption expenditure (PCE index), and Fed Chair Jerome Powell's speech to gauge the market sentiment. Euro-dollar remains pressured around the week's top, seesaws near 117.50 to 55 amid Friday's Asian session after the first negative daily closing the previous day. In doing so, the pair sellers attack 100 SMA and an ascending trend line from the last Friday near 117.50 to 45 as the MACD signal line inches closer to flash a bearish sign. The same joins the quote's inability to cross 200 SMA during the previous uptrend to direct sellers towards the yearly low marked on 20th of August, surrounding 116.65. It's worth noting that the 61.8% Fibonacci expansion level of the pair's current month moves, around 116.30, will add to the downside filters before dragging it into November 2020 lows close to 116. Next resistance is at 117.85.
This is today's market news. Thanks for listening. We'll see you next time.